Howdy, folks. Welcome back to the Stockcharts TV studio here we're finally dealing with some rain, Redmond, Washington. Good to be back with you, though. Thanks for tuning in. My name is Grayson, Roze, Chief Strategist here at Stockcharts.com. As always, it is delightful to be with you. It's delightful also to be back in the studio for our monthly episode, 10 charts to watch, 10 stocks to watch. We kind of always change the name from month to month, but we're calling it Charts to Watch this month. I am joined, of course, by my good friend, Mr. David Keller. Dave is the Chief Strategist at Sierra Alpha Research. You know him, you love him. He's been here many times. It's good to have you back. How you doing?
Good to be here, my friend. Doing well.
Okay, let's touch on the market a little bit before we jump into our picks. Now, I got a bone to pick with this market because it was supposed to get sick in the month of August and September, right?
I feel like we covered that widely in the last month's discussion.
We talked about all that seasonal weakness that we were going to see. Instead, I'm the one who got sick. I was stuck in bed for a couple of days with a cold, as you could probably hear from my nasally voice. What happened? No seasonal weakness in September.
I mean, I'm reminded by this has been a great educational 2025 in so many ways, but I feel like in September in particular, good reminder to think about seasonality. I still think it's incredibly valuable.
Yeah.
But what you have to remember, these are tendencies, not absolutes.
Yeah.
And we talked about that last month,
Exactly.
right? Here's what generally happens. And, Jeff Hirsch, whose father popularized seasonality, would say this is sort of the base case, right? Yeah. If no like extraneous one-off things happen, here's kind of the default of what to expect. But you have to always be open to the fact that things can and often will be different. And I think that's what we saw in September. I mean, we saw a resurgence in the growth leadership that had been floundering in August, right? I mean, they'd all kind of been pulling back. I even had short NVIDIA as one of my calls, which I'm sure we'll address here in a moment.
I forgot it was a short pick, yeah.
It was.
Yeah.
It didn't work out very well, right? Because and I think that was one of the biggest shifts that you had to see was that return. But for me, it was a great reminder of why we do what we do using the Stockcharts platform day in, day out.
Yep.
Because you're not just making bets based on what you think might happen or what you think should happen. You're focusing on how the evidence evolves. And even if you think the seasonality says September is going to be a rough month, if September ends up being strong, if certain stocks start to lead, you're able to recognize that and reposition effectively. And I hope that viewers and listeners were able to do that.
Yeah, as traders, as investors, as technicians, we like to think in terms of probabilities, right? And for me, seasonality has always been a probability booster.
Definitely.
It's just kind of saying there's a higher chance of this happening than this happening.
Yep.
Doesn't mean it's guaranteed, though.
That's right.
Okay, before we jump over to our picks, I got to throw up this chart of the S&P 500.
Yeah.
I want to give a little bit of context to this environment because we're touching on it there with the seasonality discussion. So here is a really, really clean and simple look at the S&P 500, right? All we have on this chart, other than the candlesticks, we've got a 21-day moving average. It's an exponential, so it's going to move a little bit faster than a simple. And 21 days is approximately a month for anyone who doesn't know. Here's what we've seen out of the S&P 500 off the April lows. The first time that the S&P 500 closed above that 21-day moving average was April 24th. It's been 110 trading days, including today, as of this recording. It's been 110 trading days since that first close on April 24th above the 21-day moving average.
Yeah.
We have closed below this 21-day twice. Now, we're looking at the S&P 500 itself, the index. If we pull up SPY and we run that same thing, we've got the same numbers, 110 sessions, 2 closes below. But one of those, to me, has an asterisk on it because it is this one, which closed below its 21-day moving average by a single penny.
Right.
So effectively not even a close below the 21-day moving average. The strength that we have seen and just the straightforward move, the consistency out of this move, no volatility, this is crazy.
Yeah.
There was a great note that was put out by a good friend of ours, Frank Capilleri. I think you just had him on a show.
I did.
Your show.
Yeah.
Has been writing for Stockcharts for a while now. Frank put out a note basically comparing what we've seen off the April lows to 2017. If you think back to 2017, that historically low volatility year, crazy just how much the market just kind of chugged higher. I mean, this is what we were facing in August and September. We had a lot of calls for that seasonal weakness and everything, but we're facing a market that's just continuing to stay resilient. It's wild.
I mean, I think the way I describe it is, this market is innocent until proven guilty.
100%.
And how do you, Innocent just means it's generally trending higher. We're trending higher, low volatility. We're seeing consistent higher highs and higher lows. We're not breaking any short-term resistance levels. We haven't made a new swing low off the April lows, right? Every time we've pulled back, it's been higher than the previous pullback.
Right.
And that's Ralph Acampora, one of my mentors, was big on that. If the market's going up, you don't have to assume that that's going to keep going, and just look and make sure we keep making progress on those pullbacks. And that's what's happened. So I think the biggest danger right now is investors becoming complacent, which is what usually happens during an extended bull market. All of a sudden, we start to get really overconfident. We start to feel like this is just going to continue forever. And that's usually when that's when the music starts stopping, you know? So I think, to be honest with you, volatility has remained very low. The VIX is still super low. At some point, the VIX is going to spike. Credit spreads, a measure of risk in the bond markets, super narrow. At some point, they're going to widen. So I think it will behoove investors to just assume that is going to continue to work, but look for those red flags to emerge. At some point, they will. And if you have a consistent process, you won't miss them.
Yeah, we're seeing that. One of the charts that stands out to me, we're seeing that reflected in the options market, in put-call ratios that are deep down in that
way low
complacent zone.
That's right.
We would call them. So our market summary dashboard, if you're not using this page, definitely one resource that you got to add to your toolkit here. Tons and tons of stuff on this page. We love to touch on it on this show especially. But down here in that sentiment panel, you've got those different indexes, you've got those put-call ratios, but there's a chart in here that I absolutely love to pull up. So this shows you when the put-call ratios are down in this zone, we call that the complacent zone. It means that traders are just buying calls and calls and calls and calls and calls. So it's exactly what you're saying. I think that is the danger of this market. We're just getting a little too loosey-goosey here with the bullish behavior, just chugging along. It's wild.
And if there's, while we're on this page, a little bit above there is the breadth section and the moving averages, right? If you look on the right side, which are the longer term moving averages, a lot of green, right? So most things are above their 200-day. Very few things have been breaking below there. But on the left side, it used to be not red at all, and now we're starting to see red in the short term, particularly like in the small mid-cap space. That's pretty common at a major top as you start to see breadth deteriorate, start to see more high beta things rotate lower. And I don't know if that means we're at the end of the move, but I do know this is the place to remain focused because that's where you'll see some evolution if it starts to turn.
Yeah, all about those probabilities. Keep them on your side. Okay, so Dave, we're stepping back from the market a little bit. We're making our selections, things that have caught our eye, things that we're watching for the month ahead. Before we jump into that, I do want to touch on, we get this question a lot, right? The picks that we made last month, how did some of those do? What we've done, we've pulled up a chart list. Now, for any of you viewers, we actually shared this chart list after the show last month. If you're a Stockcharts member, you get this in your account. You can install these charts right into your own account, save them, get the charts directly from Dave and myself. In this case, we're looking at the little mini charts. But if you are a Stockcharts member, we're going to do the same thing this month. So all the charts that we're about to review in just a couple of minutes, we're going to bundle those up into a chart list. We're going to share those with you at a link down in the description below. Remember to look for that. Again, if you're a Stockcharts member, you can give that link a click. You can save these charts right to your own account, get our work right in your own Stockcharts account. So you got to be a Stockcharts member to get that, though. Sign up for that free 1-month trial. So many of the tools that we're going to touch on the show today are for premium members only. So remember to sign up for that Stockcharts trial if you have not already. Now, here's a quick look, again, using the candle glance look. Quick look at our picks from last month. How do you feel about the stuff that we picked last month? You had the short NVIDIA trade. You had AXP, MSI, Merck, and Silver, right?
SIL. Yeah. How do I feel about these? Mixed, to be honest with you, right? And I think, one of the challenges with doing this particular exercise and then not looking at those names again, what you miss is the whole money management benefit of technical analysis. So with any of these things, I'm immediately, as we talk about, you have a framework, you think about how to manage risk. So things I feel really good about, silver, the precious metals trade continuing to work.
Rocked.
From the end of August to the end of September, that's been fabulous. So I'll be happily following that, continuing to the upside. What am I less excited about? Short NVIDIA was all about we broke below the 50-day moving average. It didn't remain there. And I think for me, when you have a moving average breakdown, it's whether you see follow through, and we never really did, Once it regains the 50-day, then it's okay. That obviously wasn't a good move. And Nvidia testing new highs now again here as we wrap Q3.
Yeah.
Last thing I would say, Merck. Merck was a good reminder for me to be patient because what we talked about was
big pop today.
Do we get a move above the 200-day? We're actually up quite a bit to 5+% today so far. The question was, do we get above the 200-day? We never did, and so for me, it was sort of a nope. We wait. Powder's still dry. We wait for that break. I'm still waiting.
Yeah.
So good reminder not to just blindly take action. Set up a framework. Set up a trigger. Be patient and wait for that trigger. Never really happened for me.
Yeah.
What about you?
A lot of consolidation across the names that I saw. Of course, I did the innovative, ingenious, brilliant choose your own adventure path. So there's actually 11 charts here because I gave the viewers exactly what they wanted with the choice between McDonald's and Dutch Bros. Dutch Bros did not work at all. That had a really, really tough month.
Yeah.
But across the board, a lot of consolidation in these names. Things like the Bitcoin ETF, IBIT, just kind of chugging along sideways. Home builders got a nice pop and then gave it all back. So a lot of consolidation, I would say. Banks kind of did the same, just sort of drifting sideways in the month of September.
Yeah.
So we didn't see the seasonal weakness necessarily at the index level. But we also didn't see a ripper of a month. I mean, there were some tests of some moving averages. There were some pullbacks. There was some consolidation across the board.
And a lot of these, the ones that put like McDonald's, for example, right? It pulled back, but it didn't really break any key support levels. And I think that's what you found with a lot of names. It's sort of still undecided in terms of how some of these are going to evolve.
Undecided digestion. That's kind of the way that I'm thinking about that month. So
agreed.
Those are some of the names that we picked for last month. Some of the things that we were watching. Now, jumping into the month ahead, the month of October, I want to touch, before we jump into the individual names, I want to touch on kind of your process for finding these names. I'll give you kind of mine to begin with.
Yeah.
So one resource that I love to point people to, I know you do as well, you've actually got some scans of your own in here. We have a sample scan library. We talk a lot about scanning. Talk a lot about the ability to create your own custom screens on Stockcharts. Again, one of those premium features. But scanning is challenging for a lot of people. You do have to kind of learn how the scan engine works and build your own criteria. You got to know what you want your criteria to be.
Yeah.
So we've made that a lot easier with our sample scan library. So up here at the top of any page, hit that Scans and Alerts tab and look for Sample Scan Library. This gives you a huge list of scans that you can run, and you don't have to write anything yourself. All you do is pick the criteria that makes sense to you. Things like strong uptrends, maybe outperforming the market, maybe making new highs, whatever your criteria is on the long side or on the short side. You can see that this is kind of organized into two columns. You can just hit the run button and you'll get the scan results right back. It's a great, great way to sort of start with scanning. Now, my pick specifically, I found through this page, and I did kind of one thing a little bit different. I've gotten up on this soapbox many times in the past. These days, when we have so many options available to us, right? Markets keep expanding. Now we've got new asset classes like crypto that everyone's obsessed with. We've got also, especially in a market like this off the April lows, we've got a lot of names that have just rocketed higher. We have these huge gains. People see names like Robinhood putting in these crazy, crazy moves, right? And they're sort of thinking like, oh my God, how do I ever find these names? The soapbox I like to get up on is, instead of trying to think about the entire market and every investable asset class as your universe, shrink it down. Start with a smaller group. Look at fewer stocks. Start with the Dow. If you can't find success looking only at the 30 stocks in the Dow, it's not going to get easier when you look at 30,000 across every single market on the whole planet.
Yeah.
So in this case, what I wanted to highlight here is every stock that I picked came from running a very simple scan right at the top of this page for S&P 100 stocks. You'll see that across the name. We were reviewing some of the picks earlier. A lot of big names here, obviously coming from the S&P 100. But this is a great exercise that I think everyone should go through. Hit that run button, look at the stocks in the S&P 100. If you can't find some great names in that group of highly liquid, big old, big names that are moving the market, it's not going to get easier when you zoom out and you have even more names. So all of the names that I found were from hitting that run button. We can do that really quickly. You can get all those names back. It's going to give you 100, and then you can breeze through the charts and see your charts for all those names that come back. It's a great, great tool. So that's my process actually this month for picking these names. They're all S&P 100 names. and I found them using the sample scan library.
I love it. I love it.
I want to throw the same over to you. What's your process for finding these?
Yeah, not too dissimilar, right? So I kind of do a hybrid of looking through index constituents. So I look at the S&P 500. I try to do that every weekend and just go through the 500 charts and just go quickly and just what stands out. Like what do I see to go, okay, that's actionable, that's moving, and don't look at the tickers. Just look at the patterns, and that a couple of these names just came out as I'm flipping through, and I went, "Whoa, what's that? Oh, okay, that's something's happening there." And then you can start to think about what it might mean later.
Yeah.
The other one is further down this list on your page. There's the stocks making new highs. So I often look for 3-month highs. I look at stocks outperforming the S&P. Those are regular scans that I run. So during the course of the week, I'm often just kind of bringing up those scans, seeing what comes up.
Yeah.
And I have my own versions where I've added some other random things, but that's kind of my go-to.
Yeah.
And so a lot of the, couple of the names that I'll show are off the 3-month highs list. That's something a couple times a week. I just want to make sure I don't miss anything that's starting to emerge.
Yeah.
And by doing those two things, by looking at the members of a benchmark and just understanding what's working and what's not, by looking at stocks that are breaking out and breaking down, you're going to get a pretty good sense of the equity market environment and also recognize when things change, which I think is so important.
Yeah, you see a lot of the sector rotation and everything because you're looking at those lists coming back. It's huge.
So and for right now, for example, energy has started to pop up a lot on the scans. That was not the case earlier in 2025. That's a huge shift. And so that's what you find from running these scans consistently. Scheduling the scans, pro tip.
There you go.
A good one.
There you go. See, we're talking premium features, Stockcharts membership. You got to be it. Okay, that's some great context, I think, for kind of how we're feeling about this market, where we've sort of come from, where we're going, and also how we're finding these names that we're going to jump over to. So I'm going to throw it over to you for your first pick of the day, first pick of the month. What is your number one pick, something you're watching for the month of October?
So it sounds like we might have a bit of a healthcare feature here with a couple of the names that we've picked. I'm going to start with Johnson & Johnson, J&J, a name that most are probably very familiar with. We can argue a lot about the justification, the regulatory pressures, all the reasons why a name like Johnson & Johnson should be struggling, given the uncertainty. However, the chart is going up. And for me, as a technically oriented investor, I want good charts that are improving, and that's what I'm seeing from Johnson & Johnson. What's interesting about this, because we're recording this last trading day in the third quarter, in the month of August and then September, Johnson & Johnson, big consolidation, which you probably call a bull flag pattern, which is a pattern I've seen on a number of different charts. I think Motorola we talked about last month with the bull flag pattern.
Right.
Classic chart pattern where you have a big run higher, and that's basically considered the flagpole, and then you have this short-term corrective move, drifting slightly lower, lower highs, lower lows, kind of a normal consolidation, sort of an equilibrium. And then the trigger is when we finally break above the upper trend line, which we did end of last week going into this week. And so far this week, it's just accelerated to the upside. So we have a bull flag pattern. We've resolved that pattern to the upside. That's a bullish sort of trigger. We're above all the moving averages. All of them are sloping higher. The momentum improving once again. And I think that was the question for a lot of names that have had a run. Do you see surges higher on stronger momentum? And I think we're seeing that with Johnson & Johnson. I think at a high level, healthcare plays are compelling, even with the regulatory pressure. We're facing a demographic shift in the U.S. with a lot of people getting to an age where there's a lot of healthcare needs. And I think names like Johnson & Johnson are starting to show quite a bit of strength there. Healthcare has been an underwhelming sector in 2025. But when I'm scanning, running those scans, I've seen a lot of healthcare names pop up here. So this, I think, represents emerging strength in a sector you've probably been underexposed to.
Yeah. It's a great opportunity to talk about multi-time frame stuff, too.
Oh, for sure.
Because when you zoom out and you look at Johnson & Johnson over the last couple of years, I mean, just such a clear consolidation range. That thing has just gone sideways, broken out. Now, kind of making that shorter term breakout on the daily out of that bull flag, like you talked about. Great pick. I mean, just a steady move higher. A lot of demand.
Weekly chart's a great call. That's a good illustration of a big consolidation. And then a breakout. That's pick number one.
Okay, pick number one for me. David. How often do I call you David?
Rarely.
Rarely.
Might have been the first time.
Right. I think I did introduce you at the start of the show.
Yeah, maybe. Okay, fine.
That's true.
All right, fine.
David.
Yes.
When I say David,
Yes,
you
teacher.
know that I am serious about what I'm saying here. Okay? This is the seriousness of how I feel right now.
Huh?
My first pick is Apple.
Okay.
I don't love it because it's Apple, right? It's like the go-to for everything. It's a default for everything.
Yeah.
But I have to defend. I'm taking a stand. I'm putting my stake in the ground. I have to defend what is right. This is the most dunked on name of the entire, not just the Mag 7, the market.
Yeah.
And look at where this thing has rallied back to. We are right near all-time highs. We're threatening a breakout. Moving averages look great, outperforming the market. This thing has outperformed the market off of the April lows. The most dunked on name in the entire market. Yeah. Everyone has just kind of suddenly gone, oh, I think I've heard of that. It's over there. I got to defend Apple. It looks fantastic right now. You got to be watching Apple, especially when I zoom back out, again, to that kind of multi-time frame analysis. Zoom back out and look at the long-term trend on this thing. I mean, that move that we saw in April, I know it was from tariffs and all the stuff. It's all real. It's all real news. But this is a name that has been trending higher for a long time. Momentum may be slowing on the long-term chart, but a heavy outperformer. Still has a ton to love in front of it. And right now, I mean, technically, it's making that move back to all-time highs. It's threatening to make that breakout, trending higher, outperforming the market. What's not to love on this thing? RSI looks great. Bullish momentum across the board. This thing looks fantastic. This is a chart that you got to be watching right now, especially because I think that everyone has kind of ignored this recovery story. It's just hasn't gotten the love that I think it deserves.
Yeah.
So I'm standing up for what's right here. That's my pick, Apple. I can't believe that I'm putting Apple on the board, but I got to put Apple on the board.
So and there may be a consistent theme with a lot of these, but the weekly chart, as you said, is just a real. I mean that
really is.
It's easy to get scared out of Apple because of recent news, some headline. Most recently, right, it was the new product launch that did not arguably go particularly well. The stock kind of traded down pretty aggressively, but then immediately recovered. And I think that's the best short-term tell is the fact that initial kind of negative move was immediately bought up. That shows you how much pent-up demand there is.
Yeah.
If we'd accelerated lower, that would have been a big warning sign of, this is Apple's sustained business, question mark. But I don't think we saw that. I think we saw a nice recovery.
Yeah.
Good chart testing previous all-time highs.
Absolutely is. And so I love to highlight this little crosshairs tool. Make sure you have that turned on your sharp charts. I mean, if you draw that little horizontal line across there, kind of 235, 236-ish, we saw some consolidation right around there. We broke through, and now we've just continued to fly higher off of that. Now we're testing up near those all-time highs. Again, seeing a little bit of consolidation. I actually like to see that. I like to see a little bit of chop around a breakout level. So, but this thing is just steadily trending higher, holding beautifully above its 20-day moving average. Moving average is all generally heading in the right direction. Not quite the proper order if you think about the 100 there. But the 20 is above the 50 is above the 200. This thing looks great.
Not bad.
Yeah.
A big weight in our benchmarks, by the way, which is not hurting the S&P and the NASDAQ, making gains to the upside for sure.
Yeah.
All right, good pick.
Pick number two.
I'll accept it.
You'll accept it? You'll accept the seriousness of David?
So I will go back to, I can't get more formal than Grayson. I don't know where I go from there, but
true.
Grayson. So my second pick is Welltower, ticker WELL.
Yep.
And this is similar to the Johnson & Johnson pick. Johnson & Johnson, more of a defensive play in kind of healthcare pharmaceuticals. Welltower is really a play on senior housing. That's their kind of business. It's in the real estate sector. And this is a friendly reminder. We tend to think of the real estate sector as a very defensive sector. I always cringe when people say, I don't own real estate unless I'm nervous about the market, which makes sense. Higher yielding, they tend to have higher dividends. It is a generally lower volatility, lower beta, good place to ride out periods of market uncertainty. But there are also some really compelling businesses in there that are often just kind of structured more as REITs as opposed to being in healthcare or in consumer discretionary.
Right.
And so Welltower is actually a pretty good way to play that demographic shift. I was talking to one of my former colleagues at Fidelity earlier this month, and in the chart room, we had this really cool chart looking at the demographic curve, which was basically, I think it was like the 60 to 70-year-olds versus the 20 to 30-year-olds in the U.S. And just sort of looking at that shift, because when that shifts to one side or the other, that means you're shifting to a lot more people that probably have a lot more wealth that they've accumulated, which means they're investing. You might be rotating more to younger people who don't have a lot of investable wealth but are more heavy spending, borrowing.
Yep.
But thinking about the shifts in demographics, those are curves that take years, if not decades, to kind of work through. And we are going into a curve where baby boomers are now at retirement age and are now needing senior housing. And so I think this is a tailwind for stocks like this for many, many moons. That's sort of the macro theme that I think I'm playing here. But from a technical perspective, it is a chart that's breaking out. It popped up on my new 3-month high screen. So I dug into it a little bit more, understand a little bit more about, oh yeah, this is what Welltower does. This is why it might make sense that the stock is breaking out. In the short term, what I'm most impressed with is we had a really good run in July. We broke above key resistance that had been set in March and April and June. We finally broke above like 155, 157 in July, made a new high around 170. And then for the last kind of 6 to 8 weeks, we've been stalled out right around that point. We've held the 50-day moving average. And then this month, we break above 170 and now make new highs once again. We're back to overbought conditions, but that to me speaks to a stock that's showing quite a bit of strength. Yeah. This is the type of chart I love to think about, structuring from a technical perspective. If you buy into the breakout, or if you sort of assume that's your, kind of trigger for a long trade, that's an immediate initial stop for me, right? Yeah. So I like the stock as long as it holds that breakout level around 170. Yeah. For now it's above the moving averages. I think you have some pretty easy ways to manage risk using the chart. The long-term chart, fantastic, right? Yeah. If you look at the longer-term chart, you see there's just the latest breakout within a long-term period of appreciation. Good stock in a sector that probably you've not been thinking about because it's not tech or growthy, but it's going up.
It is going up. I mean, it's interesting. So my daily chart is 1.5 years, a little bit longer than what you're showing on the screen there. Yeah. And when you zoom out to 1.5 years, God, the trend on this thing is just absolutely beautiful. Yeah. I mean, what a gorgeous move higher, and just moving averages in the right order, outperforming the market, like just everything on it. Yeah. It's one of those names where it's kind of a find a good entry like you're showing there, but it's almost, if you can find one of those little periods of consolidation within this broader uptrend, hold your nose, buy it, ride.
Great argument for trend following a chart like that.
Huge trend following chart. That's great.
Agreed.
It's a beautiful thing. All right, my number 2 pick is going to be a little bit different for me. It's Costco. I don't know if you've ever heard of it. Again, all these came from the S&P 100, thanks to my limited universe of big names that move the market. This is a little bit different for me because I typically, as you guys know, as Dave knows, I typically like to find breakouts. I like to find strength. I like those relative strength lines moving higher. I want everything to be outperforming the market. I'm trying to ride trends like we just saw with Welltower. This is a little bit different for me because I'm sort of saying, I think there's a line in the sand. I think Costco is going to actually find a bottom here. We're seeing a little bit of that in the price action today. This is more of a, pick a bottom and hopefully it reverses kind of trade. If you manage risk on a trade like this, if you've got your stop set, you know where your entry is, you know where your stops are, you can do that kind of thing. It's okay. I think that Costco resumes its strength overall and starts to actually outperform, especially if we do see a little bit of weakness in the market and we see people kind of shift away from more of those growthy areas, right? Costco might see a little bit of love. It's a funny name for me, Costco, because we bucket it in consumer staples, but it's not staple-y at all. There's another name later in the show that we're going to talk about something similar. Costco certainly has that staple characteristic to it, but certainly a lot of discretionary as well, which has been absolutely flying as a sector. So what I think is really interesting about this, again, make sure that you got those crosshairs turned on. That gives you the ability to draw those sort of horizontal lines on the fly and actually measure things. When I draw this horizontal line right across, we can see that there is clear support, kind of right in the range that we've been testing here, around the 900s. Call it 900 on the dot. Clear support here from Costco. Again, within kind of a long-term, broader uptrend. If we zoom out, let's do a 5-year chart here. We can see that uptrend. We can see that we consolidated there for a couple of years back in 22 to 24. Broke out, made that move higher. We've really been consolidating again within a broader uptrend. When you zoom out to the longer term weekly, I think that's where this really, really becomes pretty clear. You draw that horizontal line right across there. We're bouncing off of that support, kind of resistance turn support. It's a little bit choppy. You got to sort of you draw some wiggle room in there. But still, a lot to like, I think, here on Costco around the 900 level. We're getting a pop off of that level right now. We got to recover some moving averages. I can pick this chart apart because we've got declining relative strength. We're sitting under moving averages. Volume dynamics aren't great. Momentum looks terrible. So it's a funny pick for me, like I said, because it kind of goes against everything that I normally do. But when you think about just basic supply and demand dynamics and support and resistance dynamics, I think Costco is a pretty interesting one to be watching for the month ahead.
If you apply kind of the classic technical approach of just thinking about risk versus reward, right? The problem with a lot of names that are breaking out, it's hard to just think about because there's a lot of risk and there's just not a lot of resistance above there. So you kind of just trending higher. This is one of those where you sort of have a better sense of the range here. You get an idea. You can limit your downside using these previous levels.
Exactly.
You can kind of get a sense of where buyers have come in before. But then the upside potential, and I would say the other thing about this chart, we talked last time, I think a lot about like layering in and out of trade, right? Thinking about taking a partial position. Like this chart getting back above the 200-day would be such a wonderful validation.
Yeah.
And so I could see taking like a partial and then following through when it gets when it sort of demonstrates that it's going to do what you want it to.
Exactly.
Good way to risk a little bit. The other thing I like is this is a good example of what I'd call technical diversification or pattern diversification, right? If all your charts look the same, you're very vulnerable to that one look changing. Getting into something like Costco, more of a defensive play probably in this environment. Not bad.
Yeah. I've always liked names like this because it has, like we said, a little bit of that kind of discretionary side to it, but also has some defensive, also has some staples. It's an interesting name.
Yeah, I like it. All right, it's a fair pick. Good pick.
Okay. Number 3.
My third one. So
Mr. Dave.
I cannot believe I'm suggesting an energy stock, but I'm going to suggest an energy stock.
Wow.
And I've been avoiding energy.
Pitchforks. Get your pitchforks
I've been
ready.
avoiding energy consistently because crude oil prices have not been particularly strong, right? I mean, it's been underwhelming, particularly in the commodity space when you look at like gold versus oil. It's like one of these is working and the other one is not. However, when I'm scanning for ideas, and this is what I love about running scans consistently, not just once, not when you feel like it's something you want to do, but for me, it's a consistent routine. You start to see some energy, and then I start to see some more energy. I'm like, okay, a lot of these charts are starting to come up. Something's happening here. Apache is the name. APA is the one we're gonna look at here. And what I like about APA is the fact that it is really broken above. It was in a clear downtrend, and the April low was just the latest new low among many for quite some time. This is a chart that's demonstrated what I call a change of character. This was a clear distribution phase. It doesn't have the long-term happiness that we see in some of the other charts we've looked at so far, but it's different. And now you can chart a lot of really constructive lines coming off of the low. So just a trend line connecting the April low and the August low kind of gives you a sense of the pace of the advance that we've had. We've had a couple consolidations. I think most importantly, this one right here is what you call a coil pattern, right below the 200-day moving average. Look how we hit the 200-day a number of times, and then we finally broke above. And that's when this name first kind of came on my radar, was clear coil pattern. It's breaking above the 200-day. It's following through. And from there, it's just been riding the 21-day EMA, pulled backs to there, which have been just kind of a classic bullish phase. So everything that you couldn't have said about the chart on the left half in 2024, now all starting to emerge. So now we're above the moving averages I want to see. We're above trend line support. It's starting to outperform. So whether or not I think energy is a big allocation, I don't say it would be the top of my list in terms of like a sector rotation strategy, but charts like APA that test well, that are scanning well, those are names that are compelling. So this is more of a turnaround story that's really followed through in a way that I think is pretty constructive. I'll assume that this can continue until I see signs that it doesn't.
I love defining that as a change of character chart. That is a great way to think about this. It's a great reason to be watching this name. I like the change of character too in the RSI. I mean, just kind of like sitting up there in more of a bullish regime. Great name. Relative strength turning around. Great pick. I like
improving chart in a struggling sector.
Yeah. I like that you're talking about chart pattern diversification as well. I think that's a great thing for us to be touching on. Sometimes in this show, we end up with just all breakouts to new highs, and it's great because that's the stuff that I like to trade. But it is nice to see.
There are other things out there.
This is a great pick. I like that one.
All right, your third.
Okay, 3 for me is going to be GILD, Gilead. Now, I don't like healthcare at all. I don't like biotechnology at all.
Okay.
But
here we are.
biotech. But here we are, because the chart has spoken to me.
Okay.
Biotech is a space that I typically like to play as a group overall. I treat semiconductors in kind of a similar way as well. There's some of these where it's just sort of easier to play the group as a whole because you never know who the individual winners are going to be. But it's so easy these days to go buy a biotech fund and just say, I think biotech's important. Here's what's happening in the space overall, that kind of thing. That said, Gilead is huge, one of the largest biotech names out there. So to me, that's a little bit different. I can sort of treat that a little bit different. And right now, I mean, the chart of Gilead looks absolutely gorgeous. I want to see the relative strength pick up a little bit, but overall, still outperforming the market. I love this consolidation, again, within a broader uptrend, really an ascending triangle here. If you kind of draw that across the lows, you almost don't even need to annotate the chart because the chart just draws itself for you. That ascending triangle on this name is just so clear to me. Use that crosshair, the inspector tool. You've got a clear breakout level to be watching right around kind of 115, maybe a little bit higher if you want to be a little bit more conservative. But you've got a little bit of yield on this name. You've got a great chart pattern. It needs to get above that kind of 115 level and above at least the 50-day moving average. We've seen those moving averages really kind of compress on this name. So I want to see those start to get into the proper order, and I want to see price get above them, most importantly. But a great name to be watching, kind of on breakout watch here. We've had this consolidation really for most of 2025. If we can make that breakout, make that move higher, I think Gilead has a lot of room to run. Momentum, not great. That's definitely a weak point on this chart. Relative strength is kind of flat, so that's also kind of a weak point. Starting to show a little bit of signs of turning up, but not much. Momentum is really kind of the weak point here. But to me, that's all secondary to price actually making the breakout. If we can see that breakout, if we can see that ascending triangle kind of really complete itself here, continue to trend higher, that is primary for me. So Gilead is definitely on my radar for the month of October.
Yeah, that's one I kind of think of like an if-then statement.
Yeah.
If we can get above that resistance, then you can kind of see further upside,
I like
right?
that.
I mean, sort of waiting for the trigger.
Yeah.
Compelling setup. Can it complete that and break out?
Right.
I think that's a great option. Yeah.
In the back of my brain there, I got a little bit of the sector rotation piece too. If we do see the market start to weaken, maybe we see a little bit more interest in healthcare.
Yeah.
Biotech, obviously kind of the growthy side of healthcare though, so that argument sort of starts to unwind for me. But Gilead, just a huge company. So I still think it's got a lot of room to run if we can see this pattern play out.
I like it.
Yeah.
It's a good pick.
We're on to number 4.
Number 4. So I'm not.
Quattro.
So I'm going to say semiconductors. I'm going to go to Broadcom, AVGO.
Okay.
So this is probably. Arguably, I would say the most important thing about this chart is I think, as goes Broadcom, that might be the one stock to watch in October. If I boil it down to one, because I think the market implications of what stocks like this do could have huge ripple effects.
I like
right.
that.
Last month we were thinking about, at least I was talking about NVIDIA. Look, NVIDIA's broken below its 50-day moving average. All the Magnificent 7 stocks are not great anymore. Is this part of a broader kind of deterioration? Ended up being, no. Things held up okay. Broadcom obviously made a new high and gapped higher in early September as well, right around Labor Day. But if you look at what's happened now, we kind of have, I'd probably call this like a pivot range is what I would probably declare this. But there was this price gap where we gapped above the August peak. I've made this rectangular shaded area capturing the August high, the upper end of that gap, and that's literally where we're at this week. The 50-day moving average is kind of right there as well.
Yeah.
So I think this chart can go one of two ways, obviously, right? I think the bull argument, which for me would make me feel really good about the ability of the S&P and the NASDAQ to make further gains in Q4, would be stocks like this hold pivotal support, rotate higher and go higher. I think there are a number. There's Meta and other names that are in a similar kind of configuration. I think these matter. I think these charts matter in terms of what it tells us about risk appetite, broadly speaking. Because if a stock like this is unable to hold that, that would be a dangerous sign. So given the strength in Broadcom, I'm going to assume that this chart is going to work until it doesn't. So maybe I take a speculative position given the fact that we've pulled back to what I'd call gap support. We pulled back to the 50-day moving average. However, if we would break the 50-day, if we would break down below that gap, if the RSI would push below 40, those would all be very telltale signs that this kind of semiconductor-driven euphoria we saw in September is starting to dissipate. And then I would say Q4 all of a sudden feels a lot more like a 2018, which was a really ugly Q4, which is pretty unusual. Fourth quarter is usually really good, but we've usually had a major low by now, and we obviously have not. And so I think charts like Broadcom that are vulnerable, charts like Meta that are vulnerable, I don't know necessarily if I would think of these as the best opportunities for a position, but in terms of charts to watch, I think these are absolutely vital. And whether they hold support, I think is going to matter. It's going to have a broader implications.
I think that was a great defense of the one chart to watch. You did a good job.
There we go.
And I'm going to add, maybe a little bit of fuel to that fire too. Okay. I think Broadcom is one of those names that people forget how huge it is.
Yeah.
This is a $1.5 trillion company.
One of the largest.
It is huge. I think people see Broadcom and they think like, oh yeah, it's like kind of a big company. I think it's probably in the S&P 500, right? Huge name.
Yep.
When you think about it in that context too, of kind of the weight that Broadcom holds, I think that says a lot.
And right now, I mean, your chart of Apple has had an incredibly strong September. Compare that to things like Broadcom, which are looking more vulnerable. So within the Magnificent Seven, there's quite a bit of differentiation between what's really working right now, what's gapping higher like Alphabet, and what's like big question mark charts in mind. And they're not ugly charts yet, but they're not great. They're kind of like, and that concerns me a bit.
Yeah. I like it.
Okay.
A lot to think about there.
Your fourth.
My fourth is going to go back to the big three of classic tech.
Oh, wow.
So we've seen, if I think about the big three of classic tech, right? I think about IBM, which is my pick. I also think about Oracle, and I think about Intel.
Okay.
That's kind of like the old school tech, right? You know, had their flyer years a long time ago. They've been sort of replaced by all these newer names. But we've seen two of those get these huge boosts in the last couple of months, right? We've had tons of news coming around Oracle, tons of news coming around Intel. IBM is kind of the one that actually has been doing really well. It's not getting saved by some big NVIDIA deal. IBM actually has had a really stellar couple of years here. Within this really nice, choppy, it's a little bit choppy, but it's still a really nice overall uptrend. IBM, I think, is one to watch right now. Trading up near new highs, not quite there, but near new highs, trading above key moving averages, outperforming the market really, really beautifully, nice long-term uptrend, some decent volume dynamics, and look at the RSI. Look at the momentum on that thing. From oversold to overbought in about a month and a half, real just flyer of a move. The momentum out of IBM actually has been really stellar. I like this kind of lower level breakout that it's printed here around kind of the 260 level. I like that we're chopping around a little bit near these new highs. I want to see us continue to push higher. But I think IBM has a lot to like technically. I really like the momentum dynamics there. A lot of people, we touch on this a lot on the show. A lot of people see RSI overbought and they think, well, now it's got to turn around and come crashing back down because it's gone too far.
Yeah.
In reality, overbought means up a lot. We like to say that phrase, right? And overbought means there's overwhelming demand for this stock. So we can cool off a little bit here near the breakout level, hopefully consolidate there, and then solidify that, move higher. I think IBM still has a lot of room to run ahead of it. I actually haven't really stepped back to look at, so the long-term trend here on IBM.
It's pretty good.
Just like stellar couple of years. This is the one that's kind of flown under the radar, I think, for a lot of people.
Buy IBM when it's tagged the 200-day or the 40-week moving average has been an incredibly profitable approach
strategy
for the last 3 years. I mean, since 2023, it just kind of broke out. And if you look at the weekly chart, look at the 40-week moving average.
This is a 5-year chart here.
It just keeps pulling back to that. And so, I mean, just the long-term strength has been there. It's had these painful drawdowns along the way, but, recognizing that longer-term trend is pretty solid.
Beauty.
It's been valuable.
It's always funny if you got any friends who work at NVIDIA or Google or anything like that. If you ever mention, hey, IBM looks pretty good, they will just light you on fire. They'll tell you, IBM is where they're going nowhere. I'm like, Well, I don't know what to tell you. The chart looks
Good
fantastic,
chart, though,
and people are
right?
making money here.
That's
So,
right.
check your sources. But yeah, IBM I think is one to watch for right now. Still looks absolutely fantastic within this longer-term uptrend.
Yeah.
I think still has a lot of room to run
I like it.
and has some yield. So
Good,
that's nice.
good chart. All right, my last one.
Last
so I'm going to
pick.
take your the Bitcoin trade from you. Last
Okay,
time you
yeah.
talked about, I think it was IBIT.
like that
you
one,
talked
IBIT.
about.
Yep,
So
yep.
I'll throw
Good ETF.
Coinbase. I feel like every month we're highlighting some other way to play the cryptocurrency space. We'll see. I mean, it's been a noisy month for Bitcoin.
Yeah.
It's kind of been feast or famine. It's had like these really good signs, but then it's really been consolidating for quite some time. And I know there are a lot of question marks about whether an uptrend resumes. When I look at the chart at Coinbase, I mean, it's a pretty volatile name if you look at the range that we've been in for the last 12 months. We had an acceleration up to like 440 and change in mid-July, then a big haircut, and it had a 50% retracement from the April low up to the July peak, 50% of the way down, right around 290 to 300, and we literally hit there in about 2.5 weeks. So it was a quick sort of downgrade price-wise. But from there, it's been more sideways. And so the way that I think about the chart of Coinbase is if you're looking for a way to play the cryptocurrency space, this is a pretty good direct play on Bitcoin and Ethereum and all those kinds of things. Certainly more the democratization of cryptocurrencies and more investors having an appetite for it. But it's bounced off of that support a number of times. So I feel like the downside risk is pretty well defined. I think looking at potential support around 290, 300, and as long as we hold that on pullbacks, it's still okay. And then if we get the upside follow through, if we can manage to get back to retest the previous highs, I think that would be pretty good. So I think the risk is limited, which is what I like, or at least it's clearly defined. In terms of a trigger, I look for a break above the 50-day, which we're just starting to get this week, a follow through above previous resistance with improved momentum. And I think that's what I'd be looking for on a chart like this. We're in a sideways phase. We're consolidating. Can we break out and sort of signal a new uptrend? And a change of character from neutral to more positive shift. Compelling way to play cryptocurrencies, and again, maybe getting close to a good trigger here.
So I think the number on coin is 342.
Okay.
So I'm looking at the long-term chart. Again, I got my crosshairs tool turned on.
Yeah.
One of my favorite features of that little tool is that if you hover over any candle, any bar, it'll tell you the price information for that specific spot on the chart.
Yeah.
Also volume and other things. Week one of trading for coin, it closed at 342. You're right below that right now.
Yep.
So realistically, I mean, this is trying to make a breakout from its IPO base.
Yeah.
If you compare it to some of the other names that have done that recently, think about like Hood. I just looked this up a second ago. So Robinhood broke out of its IPO, basically first 2 weeks of trading, and is up 160% roughly from the close. I guess actually in its second week of trading.
Yep.
But this is what you're looking for on coin. You're hoping that it does this kind of thing, right?
Yeah.
You want to ride that IPO-based breakout and hope that you get a 160% move out of it. We've seen a lot of other names do similar things. Palantir, go look at a longer-term chart of Palantir, that kind of thing. That's what you're looking for on coin. I think this is a fantastic chart to watch right now. Really interesting one.
There we go. Your final pick.
My final pick is going to be Walmart.
All right.
It's a lot less
Big Box
exciting
Tuesday.
than coin.
All right. Yeah.
You got Coinbase here, and now we're going to talk about Walmart. I sort of feel like I'm the cold glass of water here at the end of the night. But Walmart looks fantastic technically. I love this thing. Reminds me a lot of Gilead, so similar kinds of themes.
Very similar.
But actually, I think a much better chart. This is sort of an improved Gilead, if you want to think about it that way. Obviously, different sector, different business, all of that stuff. But really nice long-term uptrend. Consolidating, really clear ascending triangle, I would say. I think your level to watch is kind of 104. I would draw that right there. We've seen some clear reversals off of that kind of 104, 105 level. So that would be kind of my line in the sand. Look for that 104, 105 level. That's kind of your range. Moving averages, though, in the right order. I love to see that. We're riding the 20-day higher. Let me give you a little bit of a narrower look. So we'll change this to a one-year chart. So there you can see us riding that 20-day moving average higher, especially in the month of September. 20 is above the 50 is above the 100 is above the 200. That is my phrase that I love to be able to say. If I can say that line, I got it memorized because when I say it, I just get so happy. When I get to see the moving averages in the proper order like that, it just makes me smile. We're seeing I would say, the start of a reversal in relative strength. So has not been outperforming the market. That's one weak thing on this chart, just like we looked at with Gilead. But we're seeing that start to change. It's had a great month of September. Definitely not seasonally weak in September this year. And we've seen a reversal in that kind of relative strength trend. We need to break this relative strength downtrend, basically. If you think about that relative strength line, you draw that downtrend on it. We needed to break through that. But again, all of that is secondary to price itself. This formation that we're looking at, that ascending triangle, I like the move here on Walmart. RSI momentum, not fantastic, but not bad by any stretch. Just kind of chopping sideways, but up there in a bullish regime, which I'd like to see. Walmart is just a great looking chart. If we zoom out to a longer term chart too, we can see that this uptrend has really accelerated in the last couple of years, really out of sort of the weakness that we saw in 22. We've seen Walmart absolutely fly higher. It's a weird name, just like Costco. This was the one that I was going to bring up because it's got that defensive, staple-y side to it. It's bucketed in staples, obviously. But you got plenty of people that are going to Walmart to buy TVs and random stuff that they absolutely don't need. So it's discretionary and staples kind of all rolled into one. It's a rather important company too up there. Not quite in the $1 trillion club, but a pretty big name. I don't know if you've heard of this company before.
I have.
Yeah.
This is one of those where I immediately set an alert. This is, something I do on Stockcharts multiple times every day.
Huge.
You click on the bell below the chart.
Yep.
104,
Right
105,
here.
like that's the trigger. And this is a perfect example. It's like, look, really interesting setup. I think the trigger is above that resistance. Set an alert. The platform reminds you when it's done.
Yeah.
Great.
I'll show you exactly how easy it is to do that. So let's say 104 was your level. You type in 104, choose your notification, email, text message, site notification. You can even add a little note. Say Walmart's breaking out above that 104 level that Grayson and Dave mentioned. Here's a reason to care about it. So really nice to be able to do that from the workbench. Dave, that was 10 charts to watch for the month of October.
There we go.
We did it. That was pretty good. Any final thoughts, any parting wisdom, anything that you are inspired to talk about?
No, I would say we were surprised by the seasonality in September, not as weak as we would have thought. We have, it's on September 30th is when we're recording this. We have a potential government shutdown going on.
Right.
The last time we had a big government shutdown like this, we had a really rough Q4. I don't know if that's a perfect way to project that, but I would say this is reminding me, don't be complacent. Have a good process of regularly reviewing charts like this to see if things change. Because if you do it consistently, you'll recognize those change of character, which I think are vital.
Yeah. Use stops.
Stops.
That's my
and
take.
Use good money management principles.
Use good money management. Use good risk management. But this is the type of market where you got to just keep those stops in there.
Yes.
Keep adjusting them higher. Have a cup of coffee and just kind of let it ride. That's what this market feels like to me.
Agreed.
So, month of October, 10 charts to watch. I want to thank my guest, Dave Keller. David, if I'm being serious with him talking about Apple, you've been watching David Keller and Grayson Roze here on Stockcharts TV. Thank you so much for tuning in. Remember, all these different tools that we're talking about, scanning, chart styles, multi-time frame stuff. We're talking about setting alerts, all those different features. You got to be a Stockcharts member to take advantage of those. So if you want to trade and invest and analyze the markets with the same toolkit that Dave and I and so many others around the globe are using, you got to be a Stockcharts member. So visit stockcharts.com. Check out that free 1-month trial. We got some great things coming up too towards the end of the year, big sales and different things like that. So I'm spilling the beans a little bit, but if you're a Stockcharts member, you get to take advantage of it all. So definitely sign up for that free 1-month trial. Level up your investing toolkit, level up your technical analysis toolkit with the same premium features that we are using day in and day out. I want to thank you guys again for joining us here on 10 Charts to Watch here on Stockcharts TV. We'll be back next month for another episode, but until then, chart on, my friends.